be honest, the largest position in my portfolio, mine, not Elite Pro, my personal portfolio, and it's a chip maker, it's a chip giant, a giant that is losing steam, in the name of Intel, INTC. Intel declared its earnings, its Q2 earnings, and they missed. So sad. However, I am not sad about it. Yes, it's the largest position in my portfolio. I am actually happy about it. We're still within the bear market and it missed its earnings. Why am I happy about it? Because I'm not interested in selling out. I am interested in buying more. So Intel is trading around $35 today. And to my own analysis, I still think he might still go further down. But I'm not asking you to also do the same. Let's have a look at the details of its earnings and maybe one of the reasons why, whatever. But let's have a look at the detail. The actual revenue is 15.3 billion. What was expected was 17.96 billion. The EPS is 0.29. What was expected is the analyst expectation is 0.69. I mean, Intel CFO says that the business is there is slowdown in PC market. Intel is losing market share, which is obvious. It's losing market share to the likes of Nvidia, AMD, Micron, and a host of others. I mean, they actually cut down their yearly outlook, and the Q3 expectation has also been cut down. Let's have a look at the details in further down. Let's drill down on the details. Let's also look at the technical, the price action for the technical chart. Let's see if there's one or two information we can. I mean, I have looked at it earlier, and I think that it might actually go further down. Actually, it's trading around $35. I still feel that Intel might go below $30. That is my own view of things. You can also look at it and see, but let's have a look at the chart and let's see why I think it might still go further down. Don't forget, we're still within the bear market environment, and you also know that the US Senate has just passed a bill, to support the chip makers industry. But let's have a look at the chart. Let's see if we can get more information than more fundamental information. Here is a Intel report, second quarter 2022 financial result, July 28, 2022. Let's start with the summary here. News summary. Second quarter GAAP revenue of 15.3 billion, down 22% year over year, and non-GAAP revenue 15.3 billion, down 17% year over year. Intel, client computing and data center and AI groups largely impacted by continued adverse market conditions. Network and edge group and Mobileye achieved record quarterly revenue. Second quarter GAAP earnings per share was 0.11, non-GAAP was 0.29, revising full year revenue guidance 65 billion to 68 billion, reiterating full year adjusted free cash flow guidance. It does tell you everything you need to know, but here, this quarter results were below the standard we have set for the company and our shareholders. We must and will do better. The sudden and rapid decline in economic activity was the largest driver, but the shortfall also reflect our own execution issues, said Pat Jasinga, Intel CEO. We have been responsive to changing business conditions, working closely with our customer while remaining laser focused on our strategy and long-term opportunities. We are embracing this challenging environment to accelerate our transformation. We're taking necessary action to manage through
the current environment, including accelerating the deployment of our smart capital strategy while reiterating our prior full year adjusted free cash flow guidance and returning gross margin to our target range by the fourth quarter, said David Zinsner, Intel CFO. We remain fully committed to our business strategy, the long-term financial model, and communicated to our investor m- meeting and a strong growing dividend. What you need to focus more, apart from the gibberish they're all saying there, here, what you need to focus more is revenue. The Q2, this is Q2 2022 compared to Q2 2021, 15.3 billion. 2021 was 19.6, down 22%. This is what you need to know. Are you better this year than last year? Gross margin 35% and 36.5%, down 20.6%. Operating margin. These are the details, the the figures that would not deceive you. You know, figures don't lie. Now, business unit summary. Intel previously announced several organization changes to accelerate. Yes, we're aware of this last year, early last year, when all this was being announced. But let's look at the key business unit revenue and trends. 2022 versus 2021. Client computing, CCG, 7.7 billion, down 25%. So Intel overall is actually down. As you can see, down, down, okay, up, up, up. Okay, let's see what is up. Accelerated computing system and graphic group. This is 186 million, up 5%. Mobile eye, the car stuff unit, yeah, 460 million, up 41%. Intel foundry service, 122 million, down 54 percent. The highlight, Intel management progress during the quarter on the ramp of Intel 7, now shipping in aggregate over 35 million units. The company expects Intel 4 to be ready for volume production in the second half of this year, and it's at ahead of schedule for Intel 3, 20A, and 18A. You can read all this in your own time, you know, but for us as an investor who wants to profit, business outlook. Intel guidance for the third quarter and full year include both GAAP and non-GAAP estimate. Reconciliation between GAAP and non-GAAP financial measures are included below. Q3, this is what we are to expected. Approximately 15 to 16 billion, you know, gross margin 43.2%, tax rate, and earnings per share. Guys, be careful with these stocks. Um, a good strategy is dollar cost averaging. I still believe that Intel stock price might still go further down, but that is my own belief. Make sure you do your own valuation before you go into all this. We can still have a look at the full year 2022, the revenue, the approximately 65 to 68 billion, gross margin 44.8 billion. So at the end of the year, you still expect them to still be in profit. However, it just might not be as as you would have expected Intel to be. Adjusted free cash flow non-applicable here, guys. Here is a technical chart for Intel. Let's start with the fundamental information. As you can see, the EPS rating here is stated as 44, and the P ratio is 10. The market cap is 148.7 0.47 billion. The shares outstanding is 4089.0 million. Funds have 35% of it. As you can see, these are the EPS, the price high and the low over the years. Let's have a look at it on a weekly weekly chart. On the weekly chart here, you can see shares outstanding is 4089. Shares in float is 4048.1. The market capitalization is 148.47 billion. The share price as of today is 36.31. The 50-day average moving is average volume. From the percentage from the 52 weeks high is 35.5%. The 52 weeks high and 52 weeks low is 56.28 and 35.54. Um, these are the other information here. But let's go back on the daily chart so we can analyze technically on a daily chart. As you can see, without even drawing any technical drawing, the chart seems to be going downward. In fact, let's um, let's start with this. You can easily see that here is it's even glaring. You can see it's lower high, lower low, lower high, and lower low. So the trend is downward trending, and here it seems that it was consolidating for a while, and then you have a little upward movement here, and then the earnings down. So you can see it's pretty much a downward trading stock. Um, it's trading below 15-day moving average. This is on a daily chart. Let's have a look at it on a weekly chart. If there's anything different on a weekly chart, I mean, it's more or less the same. I can easily just draw the line that it's going down this way. As you can see, it actually consolidated for a while around here. See, as you can see, but it's pretty much down now. This is the EPS, the earnings, which was on a 28/7/2022, reported 0.2. This is for June 2022 and June 2021. So you compare the two. The changes is minus 79%. The earning surprise is minus 0.4. Let's have a look at other information here. Here you have the institution ownership funds. They have 35%, banks 2%. Um, industry, the industry is elect semiconductor. Is a chip maker. Let's have a look at checklist. Here you can see Warren Buffett checklist, 13 out of 16. 13 out of 16. So he actually failed three three metrics here. But you can see pass, 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 pass. So, but you, the failings are actually on the EPS growth, as you can see, and the assets, less industry metric. So let's have a look at Peter Lynch. Peter Lynch, it actually have 5 out of 8, meaning that it fails the three. Here again, let's have a look at Benjamin Graham. Benjamin Graham, 11 out of 13. So failing two here. So Intel is actually a value stock. It's the largest position in my own portfolio. I'm not asking you to join to get it. Also, what technically here we have the 10 weeks average moving at $39.12, and 40 weeks is 46. But as you can see, the red line here is the 10 weeks moving average. Is trading below the 10 weeks moving average. It's trading below the 10 weeks moving average. Guys, be careful with Intel. We're still within the bear market, bear market environment, inflation, and other economic vibes that are out there. The Fed is still increasing the interest rate. The last increase was in 2 or 3 days ago, which was 0.75 basis. For me, I still believe that Intel may still go further down. I believe it, with what I'm saying, I'm not saying any side of bullishness here. So it might still go further down.
You have seen the chart and you have seen the price action. Guys, do not just add Intel to your portfolio. Make sure you drill down. Make sure you use one of those metrics. Be sure that Intel is good for your portfolio. It is in my own portfolio, the largest position. We have it on our Elite Pro, Elite 100. We usually have it in the multi-asset and other funds that we have on our website. You can check the website www.eliteproinvestmentng.com. Anyway, please do not just buy these stocks because you watch a YouTube channel. As I often say, carry out your own valuation. Thank you for watching this channel. Thank you for subscribing. We'll continue to produce content that will support your investment journey. Till again.